Hi everyone, my name is Grace McCrea. I am a junior in the Applied Investment Management program at Marquette University, and I cover domestic consumer discretionary stocks. Today I will be pitching Pointe Homes Incorporated, which is a home builder, designer, and seller of single-family homes and condominiums. The stock has a current price of $22.59, and I found a price target of $29.82. So Pointe Homes was founded in Incline Village, Nevada in 2009. They proceeded to go public in 2013. Since their inception, 100% of their revenue has come from the United States. This is split into two categories. The first segment is home building segment, which represents 97% of their revenue. This is split into 6 additional subsegments: TriPoint, Parity, Trendmaker, Marasay, Winchester, and Quadrant Homes. TriPointe does the majority of their business on the West Coast, as well as in Texas, and then Virginia and Maryland on the East Coast. The second segment of their revenue is the financial services segment, which represents about 3% of their revenue. This is made up of 3 additional subcategories. TriPointe Connect specializes in mortgage financing, TriPointe Assurance specializes in title and escrow, and TriPointe Advantage specializes in insurance. So my investment recommendation for Pointe Homes is to purchase shares at $22.59 with a price target of $29.82. This gives us an upside of about 33%. So I really want to focus on the ways they are targeting expansion for the future. Their main goal is to be in the top 10 market share by the end of 2023. In order to reach this goal, they are targeting expansion specifically in Dallas and Austin, as these are rapid growing areas of Texas, as well as Charlotte and Raleigh in order to increase their presence on the East Coast. So in terms of their outlook for 2022, management is expecting an average selling price of $635,000, while they expect to deliver between 6,000 and 6,300 homes. This will put them at 90 new communities opening in 2022, which gives us about 160 active selling communities by year end. And I wanted to note that each community has about 2 to 4 spec homes, which are basically model homes that help attract buyers to the community originally. And they average about 0.2 completed and unsold homes per community, which obviously is a very low number relative to the amount of homes in a community. So my first driver is the demographics of Pointe Homes buyers. As many of us know, the pandemic has really increased the interest in single-family home ownership, especially among millennials. And currently, millennials make up 54% of Pointe Homes backlog. Their backlog can be defined as homes that are already claimed under a sales contract, but that will be delivered within 3 to 9 months. And I wanted to note that this is net of cancellations. So in terms of order activity, Pointe Homes is averaging 4.9 orders per community per month. This is due to a 26% increase in absorption rates since the prior period. So like I said, COVID-19 has really brought about a surge in demand for single-family homes, as many people have continued to work from home. And Pointe Homes is also using the low home inventory supply to their advantage with these millennials. My second driver is the asset-light land strategy that Pointe Homes utilizes. This allows them to use land option contracts and land banking agreements, which are basically ways for them to hold land for future use and purpose. They are able to control lots that they do not yet own and control their growth at least a year out. This is because they make the agreement at least 6 months to a year before the start of construction. They are also able to minimize the risk of buying land directly. In addition, if on the agreed upon purchase date, Pointe Homes decides that they no longer want to purchase the land, they are able to forego the acquisition. Currently, as of quarter 3, 42% of land is controlled by Pointe Homes, with 58% being owned. Their goal is to have this at a mix of about 50-50 land controlled versus owned. That would be the sweet spot that they call. My third and final driver focuses on the aggressive share repurchase program that Tri Pointe Homes incorporates. In November of 2020, management approved a $250 million share repurchase program. As of their last earnings call, they fully expect to continue this trend. In fact, share repurchases have increased 30% over the past year. Tri Pointe Homes is able to do this as their current ratio of cash has doubled to 2.1 times from fiscal year 19 to 20. With this excess cash balance, they have the opportunity to participate in this plan and keep shareholders happy. In addition, this helps increase their book value, which already has a 47% upside in comparison to their industry peers. Finally, it does help increase their return on equity. This has increased 33% from fiscal year 19 to fiscal year 20. So now we'll move into talking about my valuation. For the DCF model, I use the assumptions with a long-term growth rate of 1.75%, a WACC of 7.98%, with a beta of 1.62. The DCF model found a valuation price target of $27.18, which gave an upside of 18.54%, and I weighted this 50%. Then the price to book model gave a price target of $33.76, which with an upside of 47.22%. This obviously relates back to that aggressive share repurchase program as my third driver. So I decided to weight it at 40%. Then the price to earnings model gave a price target of $27.28. This was an upside similar to the DCF of about 19%, and it weighted at 10%. Then you can see on the bottom of the slide the sensitivity analysis with the WACC across the top, plus or minus about 50 basis points, with the long-term growth rate down the left side, plus or minus 50 basis points as well. Now we'll move into talking about some risks. The first one is supply chain. Obviously, with this being an issue across the country right now, Tri Pointe Homes is likely to struggle from it as well. They have limited access to preferable raw materials at their fingertips. It is harder to get their hands on lumber and roofing materials, for example. And when these become scarce, they might become more expensive. Second risk is subcontractors, which Tri Pointe Homes uses mostly for construction. It might be difficult to find and retain quality subcontractors that they want to work with. This would result in project delays. Third and final risk is land. Some land might not be available in the quality areas of target expansion that Tri Pointe Homes wants. And with inflation, land prices could be too expensive for their liking. Now we'll move on to talking about their management. Douglas Bauer is the current CEO as well as board member, and he has been since the company went public in 2013. Thomas Mitchell is the current president and COO of Tri Pointe Homes. With Bauer's previous leadership experience and Mitchell's previous lead financial positions, they work very well together and have worked well together for 30 years. This gives great confidence in the management team behind Tri Pointe Homes. You can see on the slide that they have previous experience in a wide variety of places: Pacific Crest Saving Bank, Irvine Company of Communities, and William Lyons Homes. In terms of the makeup of the board, there are 11 members, 3 of which are women and have a very wide variety of knowledge and skill set with previous work experience.